How you doing, everybody? Stock Option Sniper here. I hope you're all doing great. I hope you all had an amazing, profitable week. Or if you traded today, I hope you had a super profitable day. Today, I'm going to go over the topic of mitigation and how mitigation works, right? So in this video, I'm going to break it down for you guys and see how mitigation happens. Right? Let's do it. So let's find a stock here. Chevron. We can do Chevron. We want to do Chevron. Man, I've been getting busy with Chevron. Oh, by the way, you guys, just real quick, we've been talking about Exxon taking out that 105 since like the beginning of this month, and I did say we're gonna go to 107. Did I say 107 or 108? But I knew we were gonna take out that new high on Exxon, right? And literally we caught that spring. We caught that spring, and then we caught the ST right around the 85. And right now, this is trading at 106. So that overall play was just phenomenal, and we caught that amazing play. Understanding that all this right here was just liquidity, and people were just getting confused, thinking that it was a supply zone, and it just ran through it like nothing, right? And I'm going to show you guys how liquidity works, right? Let's leave Exxon alone. What's a good stock? Choose a random stock here. I want to choose a random stock. Let's do Zoom. Awesome. Let's do Zoom. Okay, I'll delete everything. Great. So let's go to a 4 hour, somewhere a little bit busy. Right. So mitigation. Mitigation is basically when the banks created a huge up move or a huge down move and them leaving behind their footprints. Right? Let me show you guys what I mean by that. So let me find a quick example of what mitigation is. Right? So let's say this huge down move, right? This huge down move basically, where's that move right there? I was talking about this move right here, right? This entire candle when the banks moved the prices. What happened? The candle filled that, filling the entire candle and bringing the price down, right? Filling this candle in the upside and bringing the price down, filling this entire green candle down, as you can see, right? You guys see that? And then bringing the price up, grabbing all that liquidity, closing all their position. Now, check this out right here though. That last up move before the down move, we do have a valid zone here, right? Oh, they mitigated it. It just touched it, right? The moment this wick below here, that's the moment the price was touched. Is it perfectly touched? Want to make sure. Want to make sure it's perfectly measured, right? So it barely touched it, but it did go up. So what does that mean? It means if I have everything correctly here, which I mostly do, right? So this means right here that the banks has a position that is left unmitigated. So meaning when they made this huge up move, the bank has opened up so much position and they're down on that position, right? They could be down billions and billions and billions of dollars. However, they have infinite amount of money, so it's not an issue. And they can bring the price higher, as high as they want, right? As high as they want, because they know in the future they're going to run that price back down so they can grab all their position that they were down on and break even on those positions, right? So that's just basically the simplicity of mitigation. But let's go more here. I'm gonna keep explaining how this works, right? And as you can see, this thing happens over and over and over. So like right here, we are looking to mitigate this areas right here, right? Expect price to come up here. You guys see this? 50% was filled. You guys can look at the imbalance that I have. 50% was filled. literally just tapped it, and what happened? Price went all the way down, right? The composite man is down on their position, mitigated 50% of their position, and tap that zone. There's a Wyckoff somewhere around here in the lower time frame, and what happened? The price goes down lower and lower, right? Awesome. So now what's happening is that we can see price come up higher, higher in this area, right? We have price definitely coming to fill in these areas right here, right? These are the bank smart money footprint, and I'm not creating zones here, you guys. I'm just creating areas where the banks are currently in position where they are all down in there. They have to get back and mitigate back all their positions, right? We also have some here, right? You guys see this? These are their money footprint. Their footprint is literally all over here, right? They have position that is left unmitigated. Therefore, they have to get those prices back because they are down on those positions, and the composite man do not want to be down in all those positions. But I hope you guys understand of how this is working, right? And you can literally go over any chart. You can go to a higher time frame and understand what's going on here, right? So we have smart money footprint that was left here, right? They have position here. And this is the best part about this because the banks know where all the orders lies in the market, right? So what does that mean? It means that we can also capitalize on that. They left their footprint behind when they made all these moves. So that means we can see this as future liquidity. I'm not talking about zones, right? I'm not talking about zones. I'm not talking about zones. And let me draw everything on what's going on here when the composite man made all this move. I'm going to show you guys just a sec here, okay? These are all going to be liquidity, and where individuals are going to keep saying it's a supply zone, this is where they're all going to keep getting trapped all the time, right? These are all positions that are left unmitigated, and oh, this is already filled. I apologize, right? They have some here, right there. So I'm just literally drawing from this wick to this body, right? And that's where they have position left open. You guys see that? Where else do we have this entire gap? You guys see this? So in the future, what does this mean? We can see price come up higher all the way here and take out more price here, right? Take out the lows around this area and mitigate all their position. And then in the lower time frame, you can see they came back to get all their positions back around this area, right? You guys see that? This entire fill right here, from here, how funny is it that this price was before trading at around 200 something. Now all of a sudden they're trading back at $80. What is that? 588, and now it's trading at 80 bucks. And you're gonna see this in most stocks because they say it's a recession, all that stuff. But in reality, it's just the composite man left a lot of position and they must get all that positions back. Right? Not only that, the composite man has a lot of orders around this area. Okay, they have a lot of orders around this area. Why? Because there's a Wyckoff somewhere around here. That Wyckoff is the weak hand to strong hand transfer. Make this green, right? They had a weak hand strong hand transfer, creating a spring ST, rallying it up, and doing the same exact thing, having a markup and running the price go insane. Had that distribution and had the mark down somewhere around this area, and we just kept falling and falling and falling. Right? That's the market cycle for you. And if you don't understand the market cycle, I have a video on market cycle. We don't need to go over that. It's very I have it all there, but however, there's liquidity here, and the positions in these areas need to be grabbed. And as you can see, if I take all this out, you can see right here. Let's say I'm gonna take out everything because you guys wait, hang on. So as you guys can see, let's say the price ran all the way up here, right? let's say the price is going down like this. Why is it the price going down like this? Because let's say in the future, let's say all this right here, all this stuff right here, everything here does not even exist. Okay, the price hasn't even got there yet, and all of us, how do I get out of here? And all of a sudden, we see the future. So we know that the bank, oops, we know that the bank has positions that are open here, right? Even here, nope, they mitigated this position already. Even here, from this wick to this body, right? The bank had position here. The bank had position here, right? They had open position. I'm gonna make this green because we're only talking about the right. This is why I have a video on left to right, right? We have here. These are all liquidity. And then on lower time frame, you can see in between here, there are some positions that are left unmitigated, right? Just like here. See that? Boom. We don't need to talk about refinement. We can do that in other videos, right? You guys see that? So they're leaving their footprint behind all over the place. If you guys can see that, right? We also have some here. They are literally leaving their footprint. Why is this important? This is important because now you know where you know where they're going to bring the price down into the future, right? So what does that mean? Look at this. Liquidity, 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 while we have other people, oh, demand zone. And I talk about this so many times, right? Oh, this is demand zone cookie effect. Nope, liquidity. Oh, this is a demand zone for sure. He jumped up here. Nope, liquidity. And we're running through that like nothing. Now, obviously, it's easy to see that here because it's very simple. And this is why I also show you guys my golden goose strategy, that you need to zoom out on what's really going on in a higher time frame, whether it's the monthly, weekly, or even yearly, right? But however, I usually don't do the yearly as much, but the monthly gives me enough story of what I need, right? That monthly gives me all my story. So what does this mean? What can we possibly see here? So if I was to take out everything, let's say we grab all that liquidity. I hope you guys understand mitigation so far, right? Position that needs to be mitigated just basically means closing all those positions, right? So now we have individuals trying to long the stock, right? They have trying to short it. Why? Because they think it's a supply zone. So what happens? Gives them that cookie effect, and boom, goes down. Another cookie effect, boom, goes down. Then it goes up, right? Filling that entire gap, cookie effect again, and they're gonna keep on trying to short it, keep forcing shorts. Come up to the zone, fill in that entire imbalance here, and now what happened? Mitigate everything, and boom, grab all the liquidity here, grab all the liquidity here, right? Liquidity means where is the most orders lying in the market? Some liquidity there, right? Let me move the screen, and liquidity is all the way up here. You guys see that? When they made this up move, they do have orders that they have open position here, just like they had open positions here when they made this, when they had the market, this entire market move up. But like I said, that's not an issue for the composite man, because the composite man, the market maker, has infinite money to play with, and in the future they know where the price is going, so they have no issue with that, right? So if I take out everything, because now we understand areas that needs to be mitigated, excuse me, right? Where can we see that last up move before the down move? Well, I like this candle right here. This red candle, that last up move before the down move, right? Now we just touched it. We just touched it, right? So we can go refine that, go into the weekly. Good. So what can potentially happen here on Zoom? Well, Zoom right now, it's definitely getting Not a lot of love, but this market has been getting beat up, right? And as you can see. So I would like to refine this zone much better here, right? I teach you guys how to refine, I teach refining zone much better into my private mentorship. However, you do not need my private mentorship, but if you do, the link is in my description. But refining zone is just basically finding areas of zone where prices are most likely to hold, right? Where prices are most likely to hold. So we can see liquidity being grabbed around this area, and we can see Zoom having that rip up, right? We can see Zoom come up here and grab all this liquidity up here, come back down, grab all the liquidity up here, right? And Zoom coming all the way up, grabbing the rest of those areas that needs to be mitigated, right? The position that needs to be closed by the composite man. You guys understand that? And if you watch the market imbalance, I literally teach this, right? When you find this money footprint is basically when the composite man got involved into that play. You are going to see a parabolic candle. You're going to see that wick right on it, right? And then the wick that literally, how do I say this? Wick above and then this wick in below. You measure those two and you see this entire move, this entire footprint of the smart money when they got involved and they have position that is open here, right? Guys, I want to make this a very quick video, but I want to go one more example with you guys before I let you go. Let me see that. Wow. Well, what is another stock? Let me go for a watch. Let's play AMD. I haven't played AMD in a while, right? Oh, this is what I like to see. This is beautiful, right? So I have no, I can't touch AMD, guys. I have something going on with AMD. So, and by the way, everything I talk about here is not financial advice. Please do your own due diligence. So we have, where was this last down move before the up move, right? So we understand there is that move right here that is happening around this area. So what we would like to see is the price to come down to this area because we know there's a lot of imbalances here, right? The smart money got involved in this play and left their footprint behind, therefore opening up a bunch of position. Now they are down on those position while making this entire up move, right? So they have to come back down, close those positions, so they get all those positions back and break even on those plays, right? While they make money on this entire move up, right? So you can have a lot of refinement here. I teach you guys how to refine your zone, but as you can see, all I did was find those last up move before the down move. But I do overall want to see GameStop, right? I do want to see GameStop overall. Go back to those price. Go back to this zone right here, to this zone area, and I can consider it making that bullish move, right? I also have some here. Nope, I like this zone. This zone is best for me, right? So I can put an alert here. Since I know this zone is good, I can put an alert here. I would just alert GameStop, right, to $12. And I can see GameStop going back and fulfilling the orders that the composite man left behind. Let's see if they left behind some of their footprint. There's always going to be footprint. I shouldn't even be saying that. Right, let's see if they did. Yes, they have. They have more here. Right. Oh, it's closed. Mitigated. Nope. Let's see. We have one here. You guys see that? Oh, that's crazy. We have some here. These are now in lower time frames. These are orders that the composite man left behind, right? You see this their footprint. So once that price hit our zone, right at that 12 area, I believe, we can see price potentially go back to this 27 or 25 areas where they can mitigate and close those positions. You guys see that? Right? That last down move before the up move. You can try this in any time frame. Right? What happened? Price comes back up to that zone. Boom. This is how you create and find your best demand zone. I did create a video just last night. Check it out. I think it's gonna be posted the previous past 3 days. But I created a video on structure plus SND. Right? We combine structure plus supply and demand zone, and you can literally check that out. Right? And that's how you find mitigation. So I teach you guys all this strategy, not just one by one, but as for you, you can use and combine them all together, right? Because this is exactly what I do. And I'm just breaking them down step by step. Overall, we do have a strategy where once we find our structure, right? We find our structure, we find that SND, we find that SND in a form of supply. Well, in this scenario is going to be supply, right? Waiting for that price to come up in our areas of SND, confirming it via weak hand to strong hand transfer in the form of Wyckoff and taking the price lower, targeting our structure, or we can leave runner targeting even lower liquidity on the downside, right? That's totally normal. Totally normal. That is our strategy. In my head, I was saying that price can come up here and literally go run without you and take you out at break even. That's normal too, right? Sometimes price doesn't even come up to your zones and run without you. Sometimes price just break above your zone and goes to your favor. That's all normal. It's all part of the game. You guys have to understand that. But the thing is that don't switch up your strategy just because of that, right? Your strategy works. You just need to stay. You need to refine your strategy and remain patient on how to use them in a way where they're refined very, very well, right? So what can potentially happen here? Well, we can have GameStop come back here, right? Let's see if we can get a price. I like this move right here. Let's see, 15 minutes. Okay. Nope. So this is my zone right here, right? Like I said, you guys, why did I move my zone when I found my zone? Because you have to understand where your story is. But like I said, that's for my private mentorship, you guys. I don't want to bombard you guys with information right here. I can talk about this all day, like me refining the right zone and which zone holds the most. That usually takes hours because there's a lot of things that goes to it. But I like this move right here. So I want to see price come back down, right? Price comes back down, and once price comes back down into my demand zone, we can see a price moving up higher and higher. Okay, we even have here on 5. See this, you guys? This is beautiful right here. That was the zone right there. If everything that I just charted out happened today, if I was playing GameStop and I charted out, I would have took GME calls the moment it hits the zone. The moment I wick or hit above or touch on the zone, I would have taken calls, right? I didn't just do this is because we're waiting and finding that. Why won't let me adjust? We're waiting for that last down move before the up move, right? You can try this. You can try this yourself, right? You wait for that last up move, the last down move before this up move, right? What happened? We went from a daily. Was that a 4 hour? Yep, that 4 hour. Refining the entire structure, right? I didn't break it down, but I showed you guys heat. I showed you guys what I was doing. So we lessened this entire last down to up move into this little, I'm gonna make it purple, into this little zone right here, right? that held that if you go to the 5 minute, this zone right here literally went crazy. You could have taken calls from this zone. You could have one of your amazing trading days from GameStop. I don't know how many RRs this is, but this looks like a great move to me if I was trading GameStop, and I would have threw a couple bags on it. You guys see that? Guys, I hope I added value to you. It's just an understanding on mitigation where the banks left their footprint and they have to close their positions back, right? So when I say left their footprint, basically when they got involved into this play, they created they moved up in this scenario. They moved up the market so fast that they left their footprint behind. So we waited for that last down move, right? That last down move before that up move, and we wait for price to come back up there and mitigate. Mitigate means closing their position, therefore they can take the price higher. You guys see that? I hope you guys see that. But fam, I appreciate each and every one of you. If you had an amazing, amazing week, like, share, and subscribe. If you are not yet subscribed, just remember my channel is a buildup of education. So in order for you to understand this video, you must watch the previous video. If you've been staying in tune, I know you guys are killing it. Literally, I'm posting everything on on my Facebook. I'm usually on Facebook and I'm on Instagram, and I'm posting little clips of you guys that are using these same exact strategy, and you guys are just killing it. And you guys, if you are not yet subscribed, please subscribe right now. I have a lot of video. I have video already scheduled for 2023, so those videos are coming out, and all you have to do is tune in and watch those videos and backtest. So guys, enjoy the rest of your weekend. I'll see you all on Monday. Peace.